Imagine this. You wake up one morning, turn on the financial news, and the headline screams, "Markets down 40% overnight, stocks collapsing, panic spreading, savings shrinking before your eyes." Fear takes over, and uncertainty fills the air. But then imagine this. Instead of panic, you feel calm. Instead of fear, you feel ready. You whisper to yourself, "I'm prepared." That's the difference between guessing and building resilience. In this video, I'll reveal 6 assets that, according to Ray Dalio's philosophy, can shield you from financial storms. 6 investments that don't just survive a crash, but can help you emerge stronger on the other side. And by the end, you'll see how to create a portfolio that can endure anything the future throws at you. Why predictions fail and preparation wins. The biggest mistake most investors make is trying to predict what comes next. Will the market go up or down? Will interest rates rise or fall? Will inflation fade or spike again? Even the brightest minds in the world have failed at these predictions time and time again. That's why Dalio insists, don't bet on one outcome. Prepare for all outcomes. Think of your portfolio like a ship. If it's built only for calm waters, the first storm will sink it. But if it's built to handle waves, wind, and unpredictable weather, you may not always sail the fastest, but you'll reach your destination. The same principle applies to wealth. Don't build a portfolio that only works in sunny markets. Build one that survives recessions, inflation, and uncertainty. That's where these 6 assets come in. Asset number 6. Gold and inflation-protected securities. The dual shield. Gold has outlasted empires, currencies, and wars. It doesn't depend on a government, a company, or a promise. It just is. And in times when trust in paper money breaks down, gold shines brightest. But Dalio never recommends leaning only on gold. That's why he pairs it with short-duration inflation-protected securities, TIPS. While gold protects against currency debasement and systemic risk, TIPS adjusts directly with inflation data, giving you a contractual hedge when prices rise. Together, they form a shield. Gold absorbs fear when confidence collapses. TIPS quietly increase in value when official inflation numbers climb. One covers panic, the other covers persistence. And when both forces hit, like rising inflation and falling trust, this duo becomes a fortress. But here's the catch. Most investors ignore this pairing because it feels too simple. They chase shiny promises while the real safety sits right in front of them. When markets spiral, gold keeps its silence while TIPS steadily rise. You don't notice the protection until it's too late, and by then, those who prepared are already safe inside the fortress. Asset number 5. Low volatility and tactical ETFs. Smoother rides, smarter shifts. Most investors chase the hottest stocks and end up riding a roller coaster of gains and painful losses. But compounding works best with stability, not chaos. Lose 30% and gain 30%, and you're still behind. That's why minimizing volatility matters more than chasing maximum returns. Low volatility ETFs target companies and sectors that historically swing less during downturns. They may not soar the highest, but they keep you from crashing the hardest. Over decades, that smoother ride often outperforms aggressive gamblers. Then there are tactical ETFs, funds that adjust allocations based on signals and trends. When markets are strong, they increase equity exposure. When danger rises, they shift into bonds or cash automatically. This removes the need for emotional decisions during panic. Together, low volatility ETFs and tactical ETFs give you 2 advantages: fewer gut-wrenching drops and adaptability when the storm changes direction. Asset number 4. Put options, insurance against disaster. Think of how you insure your home, your car, even your health. Why would you insure your wealth? Put options serve that role in investing. They rise in value when markets fall, cushioning your portfolio during crashes. Here's how it works. A put option gives you the right to sell an asset at a set price. If the market plunges, that option becomes valuable, offsetting some of your losses. It won't erase pain completely, but it prevents devastation. Like insurance, puts cost money, but used wisely, when volatility is low and prices are cheap, they become a safety net that protects you from catastrophic losses. More importantly, they give you peace of mind. When you know you're protected, you can stay calm, stay disciplined, and even take advantage of bargains while others are panicking. Asset number 3, liquidity, the power of cash reserves. Cash is often dismissed as dead money, but when a crisis hits, liquidity is oxygen. Without it, investors suffocate. With it, you breathe easy, while others gasp for survival. During downturns, those fully invested are forced to sell at depressed prices. But with cash or near-cash reserves, money market funds, short-term treasuries, high-yield savings, you don't just survive, you're positioned to buy assets at bargain levels. Liquidity is more than a safety net. It's psychological armor. Knowing you have reserves lets you think clearly, avoid panic, and make rational moves when fear grips the market. And with today's higher interest rates, cash no longer earns zero. It can even provide steady, low-risk income while you wait. The secret is balance. Too little cash, and you're vulnerable. Too much, and inflation eats away at purchasing power. But the right cushion gives you something priceless: time. And time is the most powerful financial asset of all. Asset number 2, strategic diversification, the only real safety net. Many investors think they're diversified because they own both stocks and bonds. But when crises hit, correlations often spike, and both fall together. True diversification means holding assets that behave differently across economic seasons. Stocks thrive when growth is strong. Bonds stabilize when inflation is low. Commodities and real assets rise when inflation eats away at paper value. Gold protects against currency debasement. Alternatives like private equity, hedge funds, or infrastructure add streams not tied to public markets. The magic isn't in any one asset, it's in the blend. A portfolio designed for balance across all economic environments reduces volatility, limits drawdowns, and compounds steadily over decades. Diversification doesn't make you rich overnight, but it keeps you from being wiped out, and that's what builds real, lasting wealth. Asset number 1, knowledge, the master key. At the top of the list sits the most valuable asset of all, knowledge. Because without understanding, every other tool can be misused. The reason most people lose money isn't bad luck, it's lack of financial literacy. They chase trends instead of strategies. They panic instead of preparing. They gamble instead of compounding. Knowledge changes that. When you know how gold protects against systemic risk, how options act as insurance, how diversification balances seasons, you stop reacting emotionally and start acting strategically. Dalio himself has said that understanding the principles of markets is more valuable than any single investment. Because when you learn how money works, you unlock freedom. Knowledge is the only asset no one can take away. It multiplies every other investment you make. That's why it sits at number 1. Closing thoughts. The world ahead is uncertain. Rising debts, unstable geopolitics, central banks pulling levers no one fully understands. You can't predict what will happen next, but you don't have to. By building a portfolio across these 6 assets, from gold and TPS to tactical ETS, puts, liquidity, diversification, and above all knowledge, you create something rare: resilience. You trade the illusion of quick wins for the reality of lasting strength. Wealth isn't about guessing right. It's about surviving storms, compounding steadily, and sleeping peacefully knowing your financial ship can handle any weather. So ask yourself, will you keep gambling on predictions, or will you finally prepare? If this message resonated with you, don't forget to like, subscribe, and turn on the bell icon so you never miss future strategies that can change your financial life. And stay with us, because in our next video, we're diving into something even deeper: how to make money in 7 days, best items to sell to traders, maximize profit, and more. Trust me, you don't want to miss it.